You are looking live at New York City this morning as we are just getting our first look at those September job numbers. Stocks reacting to that news already. Unemployment fell to 3.5% in September from 3.7% in August. Here is the key takeaway from this report, really. Its job growth slowed down just a little bit. We added 315,000 jobs in August and just 263,000 jobs last month. It is some welcome news for the Federal Reserve, though. They've been hiking interest rates with the goal of slowing down the economy and the job market and trying to fight inflation as it continues to rise. I want to bring in Julia Pollak now to break all this down for us. She is the chief economist for Ziprecruiter. Julia, great to have you this morning. Thank you. What stands out to you about the jobs report?
So this report shows a job market that remains very, very strong. This job gain, it's a decline. It's the lowest since April of 2021, but it's huge still. It's 60% more than the average annual gain in 2019. And job growth remains very, very broad-based. There's a small set of industries that is disproportionately affected by rising interest rates and by a strong dollar. We're seeing declines in some of those industries. For example, building supply stores and car dealerships. The U.S. consumer is not going to be able to tap into their house and use it as a piggy bank to the same degree that we were able to last year because of those higher interest rates.
What are some of the sectors of the labor market, Julia, that are seeing the most vacancies?
So there are still huge numbers of openings, still 4 million more openings than unemployed people seeking them, with large numbers of vacancies sort of almost across the board. In almost every industry, openings are up still 40% or more than they were before the pandemic.
There's a lot of talk, and there has been for months, about a recession. Does this latest report indicate that we could avert a recession?
It does suggest that we may see a situation where companies reduce their future headcount growth plans without actually cutting headcount. They are being more conservative. They're only hiring in essential roles, but that means there'll be very little fat to trim in a downturn.
How about the interest rate? The feds have already raised it several times this year. What are you hearing about the potential to raise it yet another time this year and beyond?
So I think the Fed is going to hold steady and stay the course here and continue to raise rates until they really see evidence that inflation is coming down. They don't want to repeat the mistake of the 70s and pull back too early, only to let inflation take off again. And so they're going to stick with this plan, and it does not yet appear to be damaging the housing market or the labor market too much. Even in the housing market, interestingly enough, we saw some decline in residential construction employment, but less than 1,000. We saw real estate actually add jobs. There are job losses in financial services, probably mostly related to mortgage lending, but those losses still remain quite modest. And so I think the Fed thinks it has substantial runway left.
Well, that's good news. I hope that holds. Next week, the September Consumer Price Index will come out. Do you think that we're going to see any meaningful change there?
So, let's hope so, right? We hope that we'll get sort of immaculate disinflation, that the Fed won't have to raise rates too much or keep them high too long, that energy prices will continue to come down, that commodity prices will come down. We do see evidence that business activity and demand are weakening abroad. And so a slowdown in Europe and Asia could actually reduce commodity prices, reduce inflationary pressures here without too much pain here and without too much of a decline in consumer spending here.
Immaculate disinflation. I love that term, Julia. Hey, real quickly before I let you go, gas prices on the mind of so many Americans right now. What are some of the indicators that you're watching to see things level off?
Well, we just got, geopolitical news that suggests that gas prices could go up again. And I think that's one reason that the Fed is concerned. The main reason that inflation was low for the last 2 months was that energy prices were falling so rapidly. But what energy prices give, they can also take away. They are out of our control, and it's not a good idea to sort of bet on them going our way.
Not at this point. All right, Julia Pollak, chief economist for Ziprecruiter. Great to have you. Have a good weekend.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.